Hey, everybody, and welcome to another episode of Real Estate Chat with myself, John Perez, and Robert Eid. And today we're going to be talking a lot about, again, charts, what's happening in the market, but something interesting in terms of if you're trying to decipher or interpret based on what data is being given to you, based on what charts are being pushed out there, what to do from a buying perspective, from a seller perspective, what banks are saying now about prices, the adjusted expectations that's going on, and it's causing a lot of confusion, right, Robert? Wouldn't you say so?
Yes, perhaps intentionally, but perhaps because everybody who's putting something out has an agenda that they're either pushing or protecting.
So let's start with
So
this
if,
first
yeah,
chart
we'll
here.
start with, sure. Okay, so
Let's look at sales.
this this is sales, and that's what everybody wants to know about because sales drives it. If nothing is selling, then prices drift. If we have, and this is another thing that I wasn't going to mention, but here we are. In the past, we used to say when there's 6,000 sales in a month, now it's 8,000 because the market has expanded, prices go up. 8,000 is the magic number. And even if you look, the average for September was 8,009, the average of the last 10. So this chart shows a whole bunch of too many things, except that it shows this dragging along the bottom line that just happens to be where we are, 37% below where we should be as the average. So as we continue to have 20% best, I'm sorry, 20, the 20th best sales month, we have the 20th best results month. And what it means is something is selling, but not everything is selling, where we just experienced a whole lot of time when everything sold, whether it was good, bad, or indifferent, because everybody thought there was a greater fool who would buy it off them in 6 or 8 months. So the sales is the number one driver of everything. If nothing sells, who cares what the prices are? Who cares what the listings are? Who cares what anything else if there's no sales?
So when we look at these sales, we saw that there was a bit of a bump in August last month, even though it was the 21st best August, but it kind of broke the usual pattern of the increases of the sales happens in September, then peaks October in the fall seasons, and then it drops. But let's
Correct.
look at what it does to gradual drop. Yes, and let's look at what it did to prices then here.
So the red lines coming down are the monthly price, and then the red numbers are the annual change from the year before. So always we saw, and for months, we saw double digit. Now we've seen it falling down and the percentage falling down. So finally we broke down to where last year's price, 2021 September, was higher than the September price for 2022, which may continue or may not, but that's where it is right now. It's only happened when we sort of have this lousy time. You can see in the middle there, 2017 breaks down through the line, which was the last time that happened.
Well, if you flip back and forth between the sales graph and the price graph here,
Yep.
Robert, as you said, when sales don't happen, I mean, in terms of the prices, it gets affected. And if we see the pattern of sales continue, because typically we see a drop once the fall peak has been reached, which is typically October, but here it looks like it happened in August. But what's the likelihood, for example, of September's sales record being beaten by this month's sales records of October, resulting in another bump upwards of price? Or if the sales flatlines or even decreases, prices will either stay flat as you're seeing here or could drop. What do you feel might?
Well, October, I looked this up when we started thinking about today, and October averages 1.8% higher price than September, which I'm going to call that flat. And that's when you consider only the up years, which was 19 times of the last 21. There was 2 down years. And if you take all of them together, it's 1.38. So that's what the price will do if it stays on mode, on trend.
Mhm.
But if it does that, it's going to stay under where we are now.
Yeah,
You
it's
just
gonna stay
move that
under.
over. So um, essentially, we're 40% off normal. And when you get that through your thick head, then you'll see that nothing can be good because it's 40% off. Now, 40% off means it's a great time to buy
Right.
if you know what you're looking for and you know how to finance it, because people are afraid of financing. What happened with the blip in August? People saw rate and they said, you know what, I'm going to either activate my 90-day commitment from the Joe Blow Bank, and so that I get my rate locked in, or I'm going to buy anyway because I have a feeling that American and Canadian interest rates are going to go up substantially. 0.75 is not nothing, but 0.75 compared to 2% grand total is huge increase. So that's why August went up.
Yeah, and we're seeing the prices. I mean, it sounds like a consolation, but we're seeing prices still above, well above 2020 price levels, which was during pandemic, during lockdowns. And so what's the likelihood that we're going to return back to those 2020 levels? Like, well, how much would rates have to go up in order for us to reach that point? I mean, that's, time will tell. And, with the banks redoing their forecasts and with major real estate companies' brands redoing their forecasts to adjust with the current situations of what's happening with the prices. Is it fair to say that neither the banks nor the major real estate brands saw how, again, for lack of a better description, how bad the prices would actually drop or how aggressively they would drop from peak?
No, they all saw it, but they dare not speak its name because the consumers are driven by price. The real estate industry is driven by number of trades. So we don't care, if we speak frankly, whether the prices drop by 20% because we know they went up by 40% too much. So they dropped by 20, it's still now more affordable. We don't care. People will more trade at a lower price than at a higher price.
Mhm.
So all of the banks, we saw the TD, revised all of their figures and put it into a slightly different fashion than we're normally used to looking at. Who looks at Ontario average prices? Who cares about Ontario average prices? We care about Toronto.
That's right.
Okay, who cares about Canada? Why we don't, they don't care about Saskatchewan.
Yeah, and
So,
it skews the averages. And we're going to get to those charts as well as we proceed.
yeah.
So let's look at the annual prices, and this is the CPI or the inflation adjusted price points, and seeing where we are now with the annual price adjusted by the Consumer Price Index (CPI)
Yep.
and the TREB average annual price, and then moving backwards from that. Go ahead and explain where we're sitting at currently, Robert.
Okay, you got to look at the yellows. The yellows are pointing out what happens after central banks increase interest rates and what it does to the common year. That's when we look at the CPI adjusted, that's as if every price going back to 1969 was written in 2022 dollars. So it's the same money all the way through. Every time they do it, it knocks down the prices. Why? Because of monthly payments. And it's nothing more or less than that. The interesting with this, the great financial crisis, the global financial crisis, which we had in 2008, that should have had everything collapse, is barely a blip on this because at that time, the prices that were then are eclipsed by what happened subsequently. That prices doubled since then, and so a little blip for 6 months, who cares? And also, they got out of that by dropping interest rates tremendously, which they don't seem to be indicating that they're going to do now.
And so, I mean, it's anybody's guess as far as where the next floor will be in terms of the prices or where the support levels will be in terms of the prices decreasing. And Robert and I were having this discussion off record, basically saying, if September, October prices look like this now and rates continue to go up, affecting affordability, what happens in the spring? Now, we all know that typically when you look at the previous graphs that we've had, typically spring prices are higher than the previous fall's prices. But is there a possibility in 2023 that spring will see a price decline, right? And will it come back to levels and will it touch 2020? I guess it really all depends in terms of how the anticipated interest rates increasing affects the buyer's psychology, buyer's confidence. What else ends up happening? The R word, recession, is being floated around. Have we hit it? Are we in the midst of it? Are we seeing it, happening in the next couple of weeks or months? How does unemployment look at that time? So many different factors, right, Robert? I guess it's still early to say or premature to say what could happen with spring prices, but if you look at it traditionally or historically, spring should be higher, therefore you should buy now. But if the rates continue to affect prices this way, could it be lower? Now, we also talked about supply part of this, and we're looking at historically low supply. I'm going to let Robert talk on that. But let's go to here. We're looking at nominal and CPI adjusted TREB prices versus the Bank of Canada rate.
That's almost the same chart as what we were looking at, except it's got the interest rates on at the same time. That you see the shadow is the real prices and the light blue is the adjusted prices. And I really want you to look carefully at this swoop that's down there with the peak at 89 and going down to about 95, right in the middle, the swoop that falls down.
Right
This
here.
is where we are duplicating, okay? Because interest rates, look where we had a tick up in interest rates, but look at the little wee tick currently over extreme right. And
Mhm.
the little wee tick that we've had now blew us all to pieces by 20%.
That's right.
That the tick that they had there in interest rates was ginormous
Mhm.
relatively. And we had 10 years of dripping, slower, swooning prices. Everybody wondered whether the world's going to come to an end.
And in
So
spite of the interest rates dropping at that time too, prices still kept going down until it reached an adjusting
because
point.
consumer confidence was destroyed,
Exactly.
industries got destroyed, free trade agreement which got implemented. Everybody in Brantford, everywhere had a small town industry from the branch plant. They canceled all that, so everybody had nothing to do. It was terrible, 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 terrible time, which won't be the same, except we're starting from a base of $1 million, where there they were at $400,000. So it's oh well, this is interesting too. This is our Royal Bank fellas chart, and going back 25 months and going forward 25 months for the previous times. And there was an observation that I made, said very few times has it gone below 20% down. And we saw now this red one kicking up when it got to 20%. So it may be that that's the end. We're going to go 20% and then we just go flat along there for a long time. Who knows?
Yeah, which
Because interest
for
rates at
somebody,
5% aren't that bad. They're bad compared to 2%, but compared to 12%, they're nothing.
and there's only so high that it can go. I mean, who's again, like you don't want to rule out possibilities because hey, if we think about it, it could go up higher, but there has to be a little bit of sense in the market as well, because if it does reach a certain point, it will affect a lot more people than the banks would like it to affect. They don't want to be in the house owning business, right? They'd rather be giving mortgages out and everybody paying those interest
They
rates.
don't want to see massive failures, no.
That's right.
And here's something that we haven't talked about for a long time, which is called a mortgage moratorium, which they did in the 30s. The bank said, look, I know you can't pay, but you just keep it, because we're not in the disposal business. If we flood all these on there, it's going to ruin the prices, and we're not in the landlord business, and we're not in the property management business. You just keep it nice, and we'll talk about it when things get better. Mortgage moratorium.
So in their fight in fighting against inflation, basically they've got to there's a balancing act of how much can we raise these interest rates before it affects everybody else in drastic ways, real estate industry being one of them, and before it affects affordability, right? So we do see sales, and we looked at September's sales figures, which was down. I mean, not surprisingly, was down about what 44%. And in terms of price has been down, but we're looking at what will October bring in terms of the sales activity, knowing that there is anticipated interest rate increase again end of October.
Well, October is on schedule for 5,000 sales, and that is just the same kind of off by 40% that it was from the regular trend. So it's more of the same,
Yeah.
more of the same. Okay, now this is the blue sky. Who knows what's gonna happen, unless you believe that the past is prologue. That for the 7 months since the absolute peak at 1.334, we have averaged, it's 18.57% off the top, which is just a little bit, 2.65 or something percent per month. So if you carry on and say, well, if it carries on averaging 2.65% loss per month, it's going to take us down in between 2 and 3%. The line's down there, the second from the bottom and the third from the bottom. So around 750 is where it could end up on December 23, which is like a year and a bit from now, if we continue to see 2.5, 2.6% loss per month. And we're going to have a low point January, February, and then you got the spring. We got the spring, which is always, get a new car, get a new house, get a new girlfriend. And the TD Bank says they expect the average annual price at the end of 2023 will be 12% less than it is at the end of 22. So who knows if they're right? They're just bean counters that don't know anything about floorboards or lintels or anything. But that's what they think.
All right, so let's look at the net new listings, because this has been another point.
Oh, this is my favorite.
Yeah, go for it.
Okay. So this up and down chart, which I'm going to shorten this down because who cares about the last 25 years? Let's just worry about the last 5 years. So you can see very, very clearly what's happened when they started to produce another report, which is called relist comparison. Salesmen, if they are getting nothing, salespeople, whether they're not getting any action on their listing, will terminate the listing and then immediately put through new paperwork with the same owner and the same company and call it a new listing, sometimes 3 times in a month. The Toronto Real Estate Board counts each one of those new contracts as if it was a new listing. They're now presenting that we have 11,237 new listings in the month of September, when in reality, if you subtract the do-overs, 2,566 of them, which is a TREB number, you get down to 8,671, which is the actual net new. That's the red line down there. So we're actually 45% below the average inventory for September when you count only new listings, not the do-overs. So the trouble is that grandma is not putting her house on the market because she has just got accustomed to going up by 1 or 2% a month for 5 years. She said, well, it's going to be better in the spring, is it? So she's not selling now. And so in a year, we'll know whether she was smart or not. I'm not saying hers because I'm thinking of my mother. Grandma's not selling her house, and not being any way sexist or ageist or anything like that. So why are owner occupiers not selling their house? Number one, because they haven't got anywhere to go. If they go to old age house, it's going to cost them $7,000 a month, so they don't want to do that. And they're so used to it going up, and they're so used to living there. If it's a bad time, why are they going to sell in a bad time? They don't want to. They hear there's no buyers because buyers don't want high interest rates. So it's a real problem. So the buyers can't be right and the sellers not be right unless everybody just agrees to do nothing for 5 years. If everybody does nothing for 5 years, then it'll just be sort of a calm, relaxed time for 5 years of nothing.
Yeah, and which is an interesting point because it's the inventory or it's the supply side of this equation that is, if you agree with that, Robert, that's what's sort of holding up these prices in spite of the rates rising.
There's nothing to buy.
Yeah.
Anything good gets grabbed. That's where these multiple offers are, because somebody who says, okay, I can't get the same price I got in February, so I'll bring it down 20%. They bring it out 20%, but it's a great house. The people have taken care of it for the last 25 years, and it's on a great street. And so the people say, hey, that's what I've been looking for, a good one, not at crazy price, at regular price. And so 4 people bid on it once because they want that good thing. Who
So
cares
as
about $25,000? I want the good thing.
Yeah, so it's to justify buying or doing any kind of action right now. If you were a buyer sitting on the sidelines thinking, hey, prices will probably go down lower. Yes, you're right, they will go down, but they may not go down as aggressively as you're thinking because of the supply aspect
Correct.
of this
Correct.
equation. Right?
Nobody is stupid anymore. Nobody is stupid where they're just going to bail out and sell it at a ridiculous price.
Exactly. And that's not what's happening here. And so if the one thing we see is the supply side of the equation continue to remain scarce or at historically low levels, that one thing will prop up price. At the very least, it'll help make prices stable, right? Meaning
Correct.
you won't see
No,
very
no,
aggressive
no
drops.
glut, no
Yeah.
glut, and so you won't get price declines based on the oversupply. Correct.
The initial drop of the price that we saw at peak February 2022, March, earlier this year, basically was that reaction, that change in the wave or the direction of where the market was going. And right now, what we're seeing is more so the psychological effects, I guess, of having a larger mortgage. Well, not as large as if you had bought like
Higher payments.
higher payments, yes. But not everybody's selling, not everybody's moving, right? Nobody's in a panic to offload their house because, as Robert said, where will you go? The rental market is just astronomical in terms of how much rents have surged. The supply side of that equation also remains very competitive. So you're in multiple offers, and tenants are paying 1 year in advance as a standard now for many of these situations. And that's if you're looking at the good property, right? So,
Absolutely. And that's okay. That's enough for that. So this is the same thing sideways of how this bad statistic of new listings with a bunch of do-overs in them screws up all the benchmarks that we use to monitor the market. In this case, I've shortened it down so you can actually see it. There's a long line in red that if you figure out what's the ratio, what's the number of sales relative to the number of listings, the standard method says that it's 44.3, which is nearly buyer's market territory. But if you subtract the do-overs, it's nearly in seller's market territory. So which one's right? Is it a buyer's market? Is it a seller's market? How can it be both at once? It's all the do-overs. That's the difference. So Trevor's got to address it. They're afraid to. They won't even put the realist comparison chart on the front page of Stratus. Never mind on the statistical report called Market Watch. They're afraid to say it.
So what do they want to say? They want to say it's a seller's market, basically, to keep some sort of confidence in the real estate market.
Well, the only way they can come honest is to say we've been sort of doing this wrong for a while, and how can they eat that crow? It's better for them to say, based on the way we've been doing it forever, it's like this, rather than saying, oh, we'll add a new element, truth into it that really makes it seem worse, but at the same time, it tells the truth. What would you rather know?
And this is where the herd mentality comes in, because we like doing things in crowds, right? We like to see what's popular and what's happening out there. And part of this confusion, again, is that you're in a market where there's still multiple offers in some places, not just some places, but many places with popular neighborhoods and high demand houses are still seeing a lot of multiple offers. And so that would sort of suggest a seller's market, right? Favoring the person who's selling it. And when you're looking at the tight supply, in many parts of the market, like condominiums, there's not as many units you see listed in today's market as you'd like to see, and also as you've historically seen. But in spite of this, when you're looking at it statistically, depending on which figure you're using, the correct figure or the non-adjusted figure, it's swinging one way or the other. Let's jump into your estimate of October 22 and
Okay, so here's what I was saying before. I see October. I've only had 11 days of, and not even that many of reporting because you had the holiday in there. It started on Saturday weekend. So it looks like 5,000 units to me, which is just continuing out the same kind of flat line, except for August, that we saw just over 4,000 in this scale. And the only time we got lower than that was in January or December or in the worst times of COVID. That's the only time you saw less than 4,000 sales. So I believe that we're going to see always never go below 4,000 sales in the Toronto market, and except for December and January.
Yeah, because there's always
And
going to be some sort of demand to move.
well, it's just because everybody goes to sleep in December and January because it's the worst days and you go on holidays and you're not thinking about it in Christmas and all that stuff.
Exactly.
So it's just not the time to do it because nobody wants to move 2 months later. Nobody wants to move in March because the weather's terrible. Anyway, so this one is more of what we've talked about already, and that's my prediction. A little bit early, 5,000 units for October, which will mean not much change in prices.
Let's go to TD
Yeah.
Economics. So this is courtesy of Korea CMHC TD Economics. So forecast by TD Economics. And you brought this up right before we started our session to record this today. And interesting because there were some adjustments in this. But Robert, go ahead and tell us what we're looking at here.
Well, this slide they've revised. So if you just quickly try and get a benchmark, you go down this halfway to Ontario and go across. They say for 2022 home sales should be 33% less in that year. And then the next year, minus 16% from the year before, and then 23.5 up 2 years hence. And then the second part is prices, where they thought in Ontario is going to be from the 2021 price to the 2022 price, which we're in the middle of, 3.8% up. And then next year, down 12%, and then up 4%. If you jump to the next one of those, it's the revised version of that. And it's harder because it's smaller, and they also changed the scale, and they didn't go out to 2024. They quit at 2022 and added 20 and 2011. It's difficult when they change everything on you.
Right.
But if you go to average home prices, which is the first big category, down to Ontario, they said that the 2020 price was going to be 15% above the 2019 price. Well, that's probably right. And then they said the 2021 price was going to be 20% above, 19.8% above the 2020 price, which is probably about right. We saw that in 2020. And then that this year is going to be just about equal to 2021, which actually is what it is. That was 10. If you look at the annual price, it's just about right. So they changed so many things about this that I don't think it tells us anything, except if we go over to that's prices. If we go over to sales, Like it doesn't look that bad,
Mhm.
but it doesn't tell us anything because it's Ontario. And Ontario is a great, huge, lumbering walrus that who knows what's going on in Kapuskasing. We know what's happening in Toronto. So it's the Toronto Dominion Bank, this fellow Rishi is always, it's his department to do real estate. And he has a way of doing it. And you can just see there how he switched from one way of doing it to another way of doing it and how he's supposed to follow and which one's worse.
Oh, it's a moving target, right? So if we're all looking at it and we feel like it, whether we're looking at it first quarter of 2022, second, third, or fourth quarter of 2022, we see now how and why prices need to be adjusted in terms of their expectations of where it's going. But ultimately, at the end of the day, we can talk about all these numbers and charts and direction of the market all day long. Robert, why don't we finish up this chat today about if you're a buyer, what should you do? If you're a seller, what you should do? And if you're an investor, what you should do? Let's start with buyers. So buyers are about to be faced with further rate increases. Buyers that have already had pre-approvals are paying more today than they would have paid earlier in terms of the interest rate. Now prices are going down. What should a buyer do? Should they just rent,
Okay.
wait it out, see to
Well, you hit this earlier. You hit this earlier, saying that market is local and market is segmentized. Let's say you have a buyer and he wants to buy a condominium townhouse at Yonge and Sheppard. Now he's not looking at anything else except for those. He wants to be in that location. Maybe he'll go to Finch. He can't go south; it's more expensive. Maybe we'll go a little bit east west. He doesn't want to. He's got a demographic. He's got a school district, whatever it is. So you just keep on looking. You keep on looking, and then you watch for somebody that's been for sale for a little bit of time and you make a rotten, lousy, low offer and see what the guy does. That's what you do. Just like he wanted you to bid over 15 bids on one house, you hit him with a 20% under asking price.
Now it's, I mean, same thing
It's
would,
buyer's revenge.
same thing
And
would
one of these
cover
times you're going to get it.
investor strategy would be similar. If you're buying as an investor, exactly what Robert said, you're buying under. And if you're an investor, you're probably not just going at 20%, you're probably going 25, 30% under.
Well, you got to have a chance of getting. Your salesman is going to say, your salesperson is going to say, oh, I don't think we stand a chance. And you say it's 6 pieces of paper. It doesn't cost that much. And you're doing it electronically. It doesn't cost a darn thing. Send me the thing and I'll
You're
docu
you're going to see where it lands, right? So if you're a seller, you're at the opposite end of this spectrum now, basically. So you're a seller, your price is a lot less. You may have bought, maybe you didn't buy, maybe you're waiting to buy after you've sold this one. Do you price ahead or do you chase the market downwards?
Why are you selling? Everything comes down to how much time do I have and how much money do I have? And most people have a very good idea in their mind. They've worked it out 1,000 times of what are they, if I sell my house or this is my net worth, and if I can I move to Sudbury or Kapuskasing, or can I move to Florida or whatever it is, they have an idea of a price. So what can you do with the new available to you price? Let's say you wanted 1.2 and now you can only get 950. Can you do with the 950 what you thought you could do with 1.2? Because remember, your target's gone down as well. Can you do what you want to do? Is this the time you want to do it? How much time do you have in front of you to do it? And don't panic, plan it. And you always do the tough thing first, which is what you hit on earlier of people were buying first because that was the tough thing to do. And then assuming they could just sell their house in a minute as soon as, and that they got caught. A lot of them got caught in February, March, April, and then price adjustment and a little bit of a nobody knew what to do. The consumer confidence was completely knocked to pieces. Anyway, so what do you do if you're a seller? You assess your situation, say, am I better off now doing nothing, or am I better off now doing what I would have done in early 2022 if I had done it? And that's what you do. Because if that person is really a cork floating on the ocean, or someone who wants to dry up, it's the time to buy up. You're a cork floating on the ocean, both moving in parallel.
And on that note, thank you so much, Robert. Fantastic conversation with you today. If you're buying, selling, investing in real estate, or if you're in the rental market, if you have any questions for us, feel free to type it into the comments here when this is up on YouTube.
Final thing.
Yes.
I finally figured out why I'm doing this with this chat with you, John.
Why is that?
Is what I want is someone to give me half a listing a month, saying, you know what? I'd like to give the business to my cousin who's just got his license, or my friend who's in the business I'd like to give the listing to, but this guy makes a lot of sense to me. Why don't I give it to my friend half and give it to this guy half, and I'll get the best of both worlds. And so one half per month, that's what all I want.
You'll explain that to us in our next real estate chat.
Okay.
Right. Thanks so much, everybody, for joining us, and stay tuned for the next episode. Visit our websites if you want to read more about what we like to talk about in real estate. Take care.
Okay.
Bye for now.